let's jump in now that we sort of know what it looks like. We're going to talk about the benefits of using a captive first. And these are benefits that we've seen in our practice working with clients. There could be, other benefits. I've been to some major conferences on captives when people have talked about other ways that they're using captives, and I'm sure those also are good benefits. But I'm going to try and focus in on the benefits that we've seen with our clients in our higher net worth private business practice. So first of all, wealth accumulation. We work with a lot of business owners whose main asset is their business. And while it's got a lot of value to it and is employing a lot of people, there's usually not a lot of money and cash around. The business owners are tending to see more value reinvesting in their business than they do putting the money anywhere. And as we all know, that can be a really, really great wealth accumulation strategy in terms of value. But it can also be a disaster. I mean, probably everybody on the call has had one successful private business owner or another that's gone through a really tough time and maybe ended up going out of business. Things change. Things are not always great. One of the things we can do for our clients is help them to employ tools that will allow them to build wealth outside of their business, and the captive can do that. Favorable income tax treatment. We're going to talk about how this works, but I think one of the key drivers in any captive discussion is going to be that the business owner is looking for ways to defer taxes, income taxes. If we've got no action coming out of Congress and the White House next year, everybody on the phone by now knows there's going to be increased tax rates. There may be increased tax rates anyways. So it's just going to make this sort of an opportunity even more attractive. And again, for those of you who stay towards the end, we'll get into the more technical side. But at the very beginning, we're going to be looking at a case study. You can get a real easy snapshot of what this can do for a client. Minimize or reduce insurance costs. Absolutely. We have clients who are using captives to increase deductibles or to replace some coverage. It's not designed to be a total replacement for all of your insurance coverages in a private business, but it can help you to cut your costs. There can be customized risk coverage. You can have risk coverages for things that you might want to have that might be too expensive to buy on the open market. So this is an opportunity to help fill that niche. Increased cash flow. Clearly, if you're saving some money on taxes, you've got increased cash flow, and that's another benefit that can be had by captive structure. Wealth preservation and wealth transfer. We have several clients who are using captives to transfer significant amounts of money outside their taxable estates. So I'm not sure this applies to everyone on the phone, but for us, working in the $20 million and up market, we have a lot of clients who have already used their $5 million exemptions, whether they're using spousal access trusts or outright gifts to GDOTs or defective trusts or whatever strategy they're using. So they've already done a fair amount of transferring, but they still could do more. I mean, they still have the money. They still have the net worth. A captive can be a really good way of continuing to get money passing outside the taxable estate, and we'll look at that as well. Finally, asset protection. Depending on how you set this up, a captive can be a really nice asset-protected vehicle, and it's one of the few things that you can do that can avoid fraudulent conveyance claims. So I'm not saying all our clients have fraudulent conveyance problems. All I'm saying is one of the exceptions to the fraudulent conveyance rule, which is basically if you give your assets away and then you go bankrupt, your creditors can come after the assets that you gave away. One of the nice things about captives is that it fits into the exception to the general rule on fraudulent conveyance. And that exception is that if you pay for something and you get fair value for it, then it's not a gift. So the creditors, in all likelihood, are not able to go after those transfers. Well, when you do a captive, you're buying insurance coverage and you're paying a fair value for it. So it should be protected in an asset protection case from a fraudulent conveyance type of an attack. So again, are there other advantages to using captives? Absolutely. But these are the key ones that seem to be the most popular for the clients that we're working with.